Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1117A, and today's date is November 2nd, 2016, and the title of the episode is 7 Economic Indicators Show We Are in a Recession as we head towards an economic crisis. Let's get into the economic collapse financial news. Now, ADP came out with their numbers today, and we know that these numbers are manipulated. We know the government numbers are manipulated. And what is happening right now is that these numbers, well, they can't keep the manipulation up. There's too many people losing their jobs. And we know last month ADP had a disappointing drop in employment. And we can see right now in October, and guess what? It's happening once again. Actually, if you look at the trend, we see that it is trending down. And what we're looking at right now is that jobs are being removed from the economy. People are being laid off. And the gains that we've seen have completely disappeared. Now, those were manipulated gains, but what we're seeing right now is that things are rapidly deteriorating. When we look at the Fed's own labor market indicator, well, it is now in contraction year over year. And when we look back in time, this is an indicator letting us know that we are heading into an economic crisis. And that's where we're heading. If we look at the real estate market, we see that U.S. mortgage applications activity, they have fallen to 5-month lows. Remember, they're trying to convince us that the real estate market is doing fine. How can it be doing fine if the American people are sitting on the sidelines and applications are continually declining? That must mean that there's foreign buyers, hedge fund investors, but guess what? They cannot keep the real estate market going. They can do it in a couple cities, maybe the 20 cities that they have outlined with Case Shiller, where they report on how great it is. But the rest of the country, guess what? The people are not in the market. The people don't have the funds. The people are being laid off. And we can see right now the situation is not improving. It's actually getting worse. And we can see there's 7 different economic indicators. And we went through many different economic indicators, but we're starting to see that there are so many now that are even to 2008 or worse off than 2008. And when we look at a leading indicator, which is investment, well, that is contracting. Over the last 65 years, you can see the steady decline in terms of investment as the U.S. slowly began investing less into the economy with each economic cycle. Now, with each downturn in investment relative to GDP, it is a perfect leading indicator letting us know that the U.S. is in a recession. Corporate America is cutting back. They're not spending. And with each one, we can see that the economy is contracting. The economy is getting worse. The economy is declining. We have entered a recession right now. And from this indicator, and we go back in time, every time we've seen investment in the U.S. economy decline, we entered a recession. If we go back to 2007, 2008, we saw it at that point in time. If you go back to 2000 to 2001, we saw it at that point in time. If you go back all the way back to the 50s, we've seen it every single time. This is an indicator letting us know that we are in a recession. We talked about the Fed labor market. Well, guess what? Every time the Fed labor market drops below zero, we enter a recession or a depression. Now, in 1977, it went below zero. We had a recession. 1982, same thing. 1987, 1992, 1997, 2002, 2007, 2016, we are below zero. Another indicator we are in a recession. We see consecutive quarters of declining earnings. Well, this is another indicator. Presently, the U.S. has had 5 consecutive quarters of corporate profits falling. The current quarter profit season is still in progress right now, but the odds are very high that it's going to make it number 6 right now. And every time, going back in time, where we saw this happen, we entered a recession. We are seeing this in every single indicator. When we look at capital goods spending, well, this is basically declining nearly every quarter since 2014. If the economy was strong, companies would be investing in more capital goods to grow production and revenue. Well, the opposite is happening right now. And companies are cutting back. And why are they doing this? Well, they're countering weak demand. So we're seeing another indicator letting us know we are in a recession. Business conditions looking ahead is declining. We are equal to where we were back in 2014, approaching where we were back in 2008. They're already predicting a poor Christmas sale forecast, letting us know that this Christmas is not going to be very good. Now, the corporate media is going to try to make you convinced that the Christmas season is crazy. They're going to show 1 or 2 videos of people running to the stores during Black Friday. They're going to tell you Cyber Monday, how many people are searching online. Searching online doesn't mean buying, by the way. And they're going to tell you that, wow, this is incredible. But when the numbers come out later, guess what? You're not going to see it. You're going to see stores close. Last time, we saw stores closing during the holiday season. Now, what store closes during a holiday season? Because this is the time of the year that they wait for. Most likely, we will see this happen once again. We see the delinquency rate on company loans made by banks. Well, it's increasing. The last 2 recessions the U.S. had in 2001 and 2008 both showed delinquency rates spiking before each recession occurred. Guess what just happened? We spiked from 1% to 1.6%, and this is when interest rates are at 0%. We are in a recession. There's no way else to look at this. Now, of course, we're not going to hear this from the government. We're not going to hear this from the Fed. We're not going to hear this from the corporate media, because all they tell us about is the stock market and unemployment, the numbers they can manipulate. But all of these economic indicators already point to a recession. Now, if we go back in time and we go back to 2007, prior to 2007, 2006, let's say, and we look at these same indicators, guess what? We see the same exact story. Now, during that time, they were telling us that everything was fine. Everything was contained. Everything's improving. Don't worry about it. The stock market was hitting all-time highs. Back then, what was the market? 14,000 points? But when we look at these same exact indicators that are flashing red right now, they were the same back then, flashing red. If you were looking, you would have seen it. But many people weren't looking. They were listening to the government, the central bank. So, from everything that we've been seeing, we're in a recession, actually teetering on a depression at this point. And we can see that we are very close to an economic crisis. Now remember, these are economic indicators. We don't have a crystal ball. We're not looking into the future, making predictions here. We're looking at history. We're looking at economic indicators. We're putting the pieces together to say, okay, I understand what's going on here, because we're seeing the same thing happen once again. And when history repeats, very rarely do you have a different outcome. I mean, they can spin the manipulated numbers any way they want, but the outcome most likely is going to be the same or much worse. And remember, nothing has really improved at all during this period. Actually, when you look at all these economic indicators, things have gotten much worse. People have adjusted to the new system where maybe at one time they had a full-time job and now they have 2 part-time jobs. They're just making it by. They got rid of their expenses. They moved out of their expensive house, maybe moved into an apartment. But it doesn't mean things have gotten better. It means that the people had to adjust to a different reality. And most of the people downgraded. Most of the people said, you know something? I can't afford that. I got rid of the expensive car. Maybe I only have 1 car because I don't have the same income coming in. And all we're seeing right now is an adjustment. During these 8 years, more and more people had to make the adjustment. There was no way around this. And those people who are being laid off, those people who are looking for new jobs, they're starting to realize that there's a problem out there. And there is a problem. The economy is not doing what the central banks, what the U.S. government is telling us they're doing. Even Deutsche Bank we know is in trouble. We know they're putting Band-Aid fixes on Deutsche Bank. We know that eventually Deutsche Bank is going to go. It's going to bring down the Italian banks, hit the French banks, and it'll be a domino effect going all across Europe into the United States. I mean, we saw this with Lehman. We saw this with the bailouts where they had to save each one of these financial institutions. Think about it. If they didn't do that, it would have been a domino effect, and each one would have went bye-bye. We wouldn't have seen them ever again. And Deutsche Bank right now, they tweeted out from their Twitter account that the ECB created asset bubbles. And they're saying that these bubbles are going to pop. And there are going to be negative repercussions, and it's going to be absolutely horrible. They're saying that the ECB is stuck between an unfavorable equilibrium of low growth, high unemployment, and zero reform momentum on the one hand and growing risks to core country balance sheets on the other. And they're absolutely right. When we look at the global economy that the central bankers have created, it did not benefit the people. It benefited the elite, the central banks, those in government, and now they want the people to pay for everything they have done. And how are they going to make people pay? Well, they're going to bring us into their new system. This is what they want to do. They're going to devalue your currency even further. So if we have thousands or hundreds in the bank or holding it, it might only be worth half, 60%. And this is how they punish the people. For them, it's fine. They prepared for it. They understand what is happening. But for the rest of the people are going to suffer through this. Pensions will be wiped out. People will not be able to handle what is going on as their life savings completely disappear. And this is why I've been telling everyone, you need to be prepared, because this day that we've been talking about, it is coming. Remember, when we look back in time and we look at all these recessionary periods, it took them years to create the bubble, a split second for the entire system to come down. Years to create the bubble, a split second to come down and crash. Here we've had 8 years to create these bubbles, and this crash is going to be horrific. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.